keep you up to speed with the impact of coronavirus pandemic on the global and Nigerian economy. Here are the following updates we have at the moment. At the global level, the confirmed cases are 4,943,001 cases. Deaths recorded at 321,998, while the recoveries at the moment are 1,936,611. In Africa, the confirmed cases are 88,700, with 2,842 deaths and 34,079 recoveries. In Nigeria, the confirmed cases are 6,175, with 192 deaths and 1,644 recoveries. Let's give you some developing stories we have at the moment. In the United States of America, the Federal Reserve Chairman, Mr. Jerome Powell, said today that the Fed's lending programs for medium-sized businesses and states and local governments will begin operating by the end of this month. Mr. Powell said that while the Fed has received a good deal of interest in those programs, if not enough, companies or state and local governments seek to borrow. The Fed will consider changes to them. That could include expanding their eligibility. The chairman's comments came before the Senate Banking, Housing and Urban Affairs Committee, which held an oversight hearing on the $2 trillion federal relief package approved in late March. Treasury Secretary Steve Mnuchin was also testifying today about the Treasury's role in the government's emergency relief program. The Fed's Main Street Lending Program, announced in March 2020, will extend up to $600 billion in loans to companies with up to 15,000 employees. The Treasury has provided $75 billion to offset any losses from their loans, drawn from $454 billion that Congress provided Treasury to support Fed loans in the relief package. Mr. Mnuchin said his department will accept losses from any Fed loans that will come out of the $454 billion. Mnuchin had previously said that the administration expected to recover all those funds. That observation has raised concerns that the Fed will have to adopt a cautious approach that will provide less financial support during the period. After years of applying plenty of stick to commercial lenders, unhappy with negative interest rate policies, central bankers in the Eurozone and Japan are experimenting with some carrots too. With the coronavirus pandemic ravaging the global economy, the European Central Bank and Bank of Japan have started paying banks to borrow from them, hoping they will keep the credit taps open for cash-strapped households and companies. This subsidy is the newest twist in the topsy-turvy world of negative rates policy, rather than just punishing banks for sitting on the idle cash as they have been doing for years. Central banks are now rewarding them for lending, or in the ECB's case, just for the mere fact of borrowing. It also marks a shift that makes any further cuts to ECB's and BOJ's negative deposit rates, an increase in how much banks pay for parking the excess reserves, unlikely soon, even as money markets begin to price in chances that negative rates may soon make debuts in the United States and Britain. Indeed, BOJ Governor Haruhiko Kuroda emphasized last week that he saw no need to deepen negative interest rates for now. The United Kingdom announced a new post-Brexit tariff regime today to give it leverage in trade talks, maintaining the European Union's 10% duty on cars, but cutting levies on tens of billions of dollars of supply in chain imports. The new tariff regime, which will come into effect from January 2021, aims to simplify what some UK officials call an overly complex EU system and help Britain negotiate trade deal with the United States of America at the Brussels-based bloc and others. But it will mean that if Britain and the EU fail to reach a free trade deal by the end of the year, the price of some food, cars, and some chemical inputs imported from the bloc will rise sharply. Britain said the regime will apply to countries with which it has no agreement and remove all tariffs below 2%. The global tariff will benefit UK consumers and households by cutting red tape and reducing the cost of thousands of everyday products, International Trade Secretary Liz Truss said. It will maintain tariffs on imported products competing with the UK industries such as agriculture, automotive, ceramics and fishing, and remove levies on £30 billion, about $37 billion worth of imports entering the UK supply chain. The British Chamber of Commerce welcomed the clarity provided by the announcement, but said it showed a trade deal with the European Union by the year end was vital to avoid substantial increases in cost for businesses on both sides of the channel. Talks on a future relationship between London and Brussels have reached an impasse, with both sides trading barbs before a crunch meeting next month. Britain published its draft legal text today, described by a spokesman for the Prime Minister, Mr. Boris Johnson, as a constructive contribution. In Nigeria, one of the oldest trade chambers in the country, the Lagos Chamber of Commerce and Industry, published a report on its recently conducted COVID-19 Impact Report Survey. According to the report, about 81% of sampled Nigerian businesses were severely affected by the lockdown measures implemented by the federal government. A further 17% stated that the measures had a moderate impact on their businesses. This implies a marginal 2.0% had their businesses functioning normally. LCCI notes the survey sampled Lagos-based businesses, considering the commercial and economic importance of the state to Nigeria. Across sectors, the survey covered food processing, agriculture, financial services, professional services, ICT, exports, trade, and freight forwarding. And that will be all for today's COVID-19 updates. You can visit our website www.proshareng.com to get more updates from our news stories, videos, and reports. This period, ProShare, Nigeria's leading financial information hub, has packaged for you the Corona Central Watch, where you can get the tracker from the global, national, and state level on how COVID-19 is impacting the economies. Also this period, we have the Debtors Africa platform, a game-changing platform that's revolutionizing the financial market and helping in debt recovery and also debt management. Log on to www.debtorsafrica.com to get all the insights you need. Till we come your way again, thank you for watching, have a nice day, and stay safe.